Well, the Reserve Bank is expected to raise interest rates for the fourth consecutive time, and there is a wide consensus that the hike could be around 50 basis points. All the respondents to our poll said that there will be a 50 basis point hike from the MPC, arguing that there is no real reason for the RBI to opt for a token smaller move given what we're seeing from central banks around the world. The Federal Reserve, for instance, just delivered its third straight 75 basis point hike and has shown no signs of slowing down. The majority expects RBI to move swiftly and get the repo rates to 6.25% by December itself, while some are expecting rates to hover around 6%. Now, 4 out of 10 respondents said that peak repo rates could go as high as 6.5% in this cycle, while others pegged it at anywhere between 6 to 6.25%. Inflation does remain high, yes, but it is more manageable at this point. It is expected to have peaked in April, like RBI says, and while there are risks to the outlook, economists do not expect the RBI to revise its current forecast of 7.2%. However, given that inflation has stayed above RBI's tolerance limit of 6% now for 3 consecutive quarters, the MPC will have to write an explanatory letter to the government explaining the reason for its failure to contain inflation. Now, the 13.5% GDP growth we saw in the first quarter, that was below RBI's projection of 16.2%. Now, while a third of the respondents expect this growth forecast to be left unchanged at 7.2%, the majority believes it will be lowered to around 7% in this policy. Now, on the stance, there was no real clear majority. 40% expect that RBI will leave it unchanged at withdrawal of accommodation, but half expect it to be changed to neutral, with some even expecting some tinkering in the wording. Now, the banking system liquidity slipped into deficit for the first time after almost 40 months recently, and there is generally more withdrawal of cash as well from the system during the festive season. So, whether it is an OMO or a VRR or something else, markets do expect RBI to take note of the deficit and address the issue in some fashion. The other thing markets will focus on is comments on the rupee, on whether there will be any measures to attract more dollar inflows, and lastly, any comments at all from the central bank on the global bond index inclusion will also be keenly watched.